All right, special guest all the way from Kentucky. Not going to make fun of him, even though obviously I'm a big UConn fan and he's a big Kentucky fan. You know, did I tell you what happened on my honeymoon?
Yeah, you went to the game.
We went to the game, but the first part of my vacation was great. Second part of my vacation was terrible. First part, St. Regis, in Kauai, perfect, right on Hanalei Bay. Second part, we end up going to Maui. I didn't know this, but it was the Maui Classic.
Yeah.
And UConn and Kentucky were in it. This was last year.
You guys had like 4 fans there.
We check into the hotel,
It's all blue.
and the hotel is been taken over by University of Kentucky fans. And I have a couple questions about that. So first of all, how is it possible that all of those fans travel from Kentucky all the way to Hawaii? They filled up the entire Westin in Maui. My wife and I were pissed. We're on our honeymoon.
Well, Mike, when you have the most winning program in the history of NCAA basketball, you tend to bring a large fan base wherever you go. So it's just what we do.
And then the other thing is, what's really amazing is that the women all wear these deep blue dresses the entire time as they're walking around.
Sure.
I've never seen that color before, and they're so made up. They're passionate.
Well, I'm born and raised New Yorker, upstate, and I went to the university because I was a Pitino fan.
Huh.
And what he did with Billy Donovan at when he coached at the Knicks, even when he brought him up and so forth, I just fell in love with the guy. And so when he went to the University of Kentucky, I became a Kentucky fan, but I was also a horse racing fan. So I'm literally, anybody know outside of Rochester? I mean, that's where I grew up. And so Finger Lakes Racetrack, if anybody's into the ponies, I mean, it is the armpit of the racing world. So that's where I spent just about every weekend growing up. So when it came time to go to college, it was, where do you want to go? And I didn't want to go. I didn't want to stay in this weather. So it was Lexington all the way. Fell in love with it.
Cool. So why don't we do a couple of things? Why don't you tell us? Now you just started a mutual fund.
Yeah, let me give you a little history if that's all right.
Yeah, give us a little background.
Sure. So I come from a family that's been in this business over 100 years. My great-grandfather was on Wall Street during the crash, lost everything. Not the 87 crash, obviously, the real crash. And, well, that was a real crash too. But grew up, in the business. My father's still in the business after 40 years. More of the, ironically, my great-grandfather was a quote-unquote technician at that time, literally with the old Edison ticker. Everybody thought he was crazy. Unfortunately, he didn't pull a Livermore and predict the crash, but stayed in it and literally lost everything. Ended up building back his business over the years, and I think it was in 42 or 43 sold it to Lehman, ironically. But so been in the business all my life. I grew up in a sort of a Graham Dodd household. So I came to the investment world from a value-based, intrinsic value approach, and when I got involved in the business, it was literally just balance sheets, income statements, and so forth, and thought that was, the way to go. And it was just drilled in my head since I was just a little boy. Shortly after joining the family firm in upstate New York, I wanted to go back down to Kentucky, and so I started as a broker in upstate, and with just the way brokers start, with a phone book and a phone, building a book of business. And as quickly as I could, as quickly as I built a business, a small book, went back down to Kentucky and opened up my own firm and really separated myself from the family business. It was around 2002, 2003 that, and played it well, from a value standpoint. If you guys remember history, was able to avoid the dot-com crash because it was, a value investor's nightmare to buy those stocks at that time, and then did allocate close to the bottom. So at a very young age was able to build a healthy book of business. And in Central Kentucky, 30 million under management at 1% is a pretty good deal with no employees. So was able to do that. But then very quickly was bored out of my mind. I was fully invested in blue chip stocks and didn't really have any clue what to do next. And so probably like many people, the transition for me, believe it or not, was started reading Jim Cramer, moved on to Rev Shark, Jim DePore, and really was taken by his approach and his writing and his sort of technical view. started soaking in everything I could about technical analysis, reading, you know, O'Neill and all the other guys, and then finally reached out to Rev. And
you know, just these guys, these young guys, will never believe that there was actually a world where there really were just a couple of bloggers.
Oh yeah, it was
I mean, Kramer and Todd Harrison, his head trader at Kramer Berkowitz, and Rev.
Well, Rev used to have a chat room on AOL called the Shark Tank. That's still what they call it today in his thing. And you would have to, you know, you'd have to log out, right? They had a limited number of people that you could log into the chat room, so you had, I think, 120 or something like that. You'd have to be up and logged in at 4:30. So Kramer, right, his guys were always in the chat room in the morning, and it was just that was just how it evolved. I mean, it was just amazing. And to me, that was way before my time. I wasn't even aware of that. Yeah, there was nobody out there. There was nobody out there. So fast forward to the time where I started learning from him and reached out to him. So finally, I had built a business, you know, knew the back end of building the administrative side and, you know, managing money and so forth. He was only trading his own capital at the time. And so I reached out to Rev and I said, look, this is ridiculous. I'd like to learn from you. I can bring to you the infrastructure of a business. Let's create a firm. And so we met, and in 2005, my wife and I moved to Florida, and he and I managed a hedge fund for the next couple of years. And that was really where I started to get an education of how to trade and make money, things that you guys, you know, work on every single day. It was very, very foreign to me. The idea, again, I had read security analysis when I was 12 years old. We had to write a report on it in our household. It's ridiculous. It was ridiculous. But that's what we did, and it literally that was the thing that we did. So I mean, you're talking about going from that to, oh, I like this company because of this balance sheet and this thing, and him going, you know, don't be an idiot, this thing's going to get killed. And I mean, it was just totally foreign for me. So it took me a long time to make that transition. But when I personally started making real money on a daily basis, then it was over. I mean, you know, you see the light. So we were there for 2 years. My wife's born and raised Central Kentucky. That's why I ended up staying there. When you find a good Kentucky woman, you don't, no disrespect, you don't leave her, because it's the best thing that's ever happened to you. So that was wonderful. So we spent 2 years in Florida, moved back to Kentucky, and I reestablished my firm. And so managed separate accounts, a small fund at the time. It was late '07, managed to, you know, in our world, in the RIA or money management world, you know, there's 3 levels, right? You can either be terrible and probably still raise money. You could be good, like in '08, just avoid the market and you'll raise a lot of money. Or you can capitalize on it, which is what you guys are expected to do on a daily basis, and probably be a rock star, right? So I wasn't over there. I didn't capitalize, but I was able to avoid, for our firm and our fund and everything, avoid '08. As really, for a lot of our clients, still sort of a long-only manager. I mean, you know, inverses were just coming on the scene, but it was, for us, it was still sort of a long-only manager. So that allowed us to blow up a little bit and bring some more money under management. Started doing more. Last night, you know, we were here early. We leave tomorrow for China, but we were here yesterday to do a bit with CNBC. So I was able to start contributing for CNBC, writing for Forbes, and doing things that, you know, got out there to raise money. I mean, that's, you know, at the end of the day, I trade every day, but, you know, I still have to bring money in and try to gain new clients and so forth, so I constantly have to market myself. So nowadays, currently, we've evolved even one more step, and last year we started the process of converting our hedge fund into a no-load mutual fund, which we've done, and that launched in the beginning of May. The symbol is TCTNX, so if you ever want to know how my day is going, just pull that up and you see my NAV every single day. And so we now are positioned as a long-short equity fund. There's about 200 in our category. We're thankful to be #1 so far over the last several months, which is good. Ironically, it's not by making a ton of money, but it's by not losing. I mean, it's amazing. You know, again, you can still, I think, do significantly well in this business that I'm in by just, you know, being at times stepping out and not getting killed in the market. So that's my story. My goal, I've evolved. If my business went down tomorrow, I would absolutely go home, set up my stations, and trade very similar to you. I'm not a tape reader per se, but I would definitely go into the 1-minute charts, play, you know, the inverse head and shoulder, and, you know, just try to scalp my mortgage and my bills. That's exactly what I would do. But I don't do that. And I like the social aspect. I like being able to go and leave the desk and go to China for a week and so forth. So I'm trying to build a $1 billion business. are, by the end of this year, we should be at 100 million. That's a big step for me. And then through acquisitions, because a lot of guys in our business are getting older, looking to retire, we are positioned as our firm to be an acquirer of businesses. We utilize Charles Schwab as our custodial platform, and so we're sort of one of their few acquiring firms, unlimited access to capital to do so and so forth. So very excited about that. But what I think Bella wants me to talk about is a little couple trades, right? I mean, so at the end of the day, I still am a trader, right? And so I'll talk about 2 trades. One of them is the worst trade of my life, was when I let fundamentals and the macro side get back into my belief system. Who's familiar with compressed natural gas? CNG? At all? Not at all? The technology? Not the stock. There is no stock. CNG. The technology. Okay, none of you. That's good. Compressed natural gas, in my opinion, from just being an interested citizen, is a phenomenal technology. A couple of years ago when it started coming on the scene, we're in a big natural gas area, even though we're not, Pennsylvania, but even in Kentucky, it's a pretty big natural gas area, and so a lot of with coal and so forth. So I became very excited about this natural gas, phenomenon and the technology about it. And so immediately was interested in what investment opportunities were out there to invest in. And at the time, there were really only 2 companies. One was Westport Innovations, you've probably traded WPRT, and Clean Energy, CLNE. Obviously, there's natural gas producers and so forth, but those are the 2 primary pure plays on compressed natural gas or liquefied natural gas. Now there's Cheniere, LNG and so forth, but at the time that was it. I was, again, and a buddy of mine, the irony is I have a buddy who lives in the city and he trades for another desk, and he said to me immediately as I started getting into this, he said, "You're going to lose money." Because I started getting very emotional about, wow, this technology is exciting. Just give me the stock and I'll go triple large. Right now I'm just going in. But I took it one step further, and this was the death curse. I call this my $100,000 trip, because I decided to fly to Denver, Colorado to see one of these companies. It was a private company, and many firms on the street have since given them capital, and they'll probably be public in a year or so. But I wanted to go see this company and learn more about the technology. And because they were private, they could communicate with me and so forth. And so I hopped on a plane and I went out to Denver, and I spent 2 days with this company. And by then, I was just enamored. I was just, holy cow. Before I literally flew out, I called my trader and I said, okay, I want you to start bidding on WPRT here. It had just come public on the New York, or it had just converted from Canada to the New York Stock Exchange. You want to put up a chart of WPRT, you can go to the weekly if you want. So back it out a little bit if you wouldn't mind. Yeah, weekly. Keep going. Okay, so that's too much. So right about here, I think I was returning from Denver, and I said, so we got to start buying this company, because this thing is just going to, there's no end to this side. This thing is great. So not only that, I blog, right? I write, I run a website, I do a lot of other things that bring in sort of ancillary fund money. And so I'm writing about this wonderful stock and how great it is, and I got scolded. I was on Fast Money one time, and I started talking about it, and at the time it traded like 20,000 shares, and I think I owned all, probably half of the float at the time. I probably should have filed something. I'm not even sure that I did. But then, of course, this starts to transpire right here. I remember this bar vividly, because let's see, it was 20%, and I think we had, we probably didn't have that much at the time. Maybe we had 20 or 30,000 shares, which for us is okay. It's not a tremendous amount, but I remember taking a pretty good haircut. And so what do? When you've now gone through, you talk about a train wreck from the very beginning. So you're now, this isn't like, let's wait for the wedge to break up, let's, go into the chart and see where the supply and demand, no, let's just buy this because this technology is phenomenal, right? So you get on the phone and you call them and you're like, hey, internal, relations or investor relations guy, what's going on? Why is the stock getting, oh, the short sellers, this and that. So I'm like, strap me to the mast, right? Because I hear the C-NIMs calling. So I buy more, of course, right? So the bottom line is, I ride this sucker, just annihilate it. And the sad part about the whole thing is, okay, you can see the date. This is not too far behind, a couple of years ago. So the sad part about it is, there's many people that followed me into the trade. Okay, many people that followed me and so forth. And we do this thing every year. Bella spoke at last year. We do this thing. We now call it the Westport Innovation shareholder meeting, because the irony is that the first time, or one of the first times we met in October in Las Vegas, everybody that was there was sitting on these 50–60% losses in this particular stock. It was a joke, it was fun, but I always had to watch my back because I figured somebody was going to club me. The bottom line is, okay, that we finally, and finally in here, I got my sanity, and I said, this is just ridiculous, okay? There's going to be a better time to buy this stock. This is absurd. And so I took my loss, and then I waited. And if you go to the daily, and I don't know if you, that's okay, stay on the weekly, it's not a big deal. But literally sometime in here, and I'll talk about a long setup or a trade that I've made recently that was actually quite good. But I finally, after collecting myself and letting a couple months go by and saying, swearing off CNG forever, right? Now it's the worst technology in the world. It will never go anywhere. It's terrible. I came back and I started watching, and so it started popping up my radar. Saw some accumulation days that were pretty fantastic. And I don't know the specific patterns you play, but there's some in my bag, and one of them, for example, is called multi-day reversal, or 1, 2, 3, 4 setup, or whatever. A series of down days after a pretty significant bullish bar, and then a purchase over previous day high, so forth. Well, it was one of those days that it came in there. Now the sad part about this trade, and I'll just be very honest with you, is that when I re-entered the trade finally, there was definitely a bit of revenge, trade to there, which is terrible, right? You don't do that, because you want to get, you don't want to be the guy who does the revenge trade just to get, your bankroll taken from you. But I will admittedly say that I did, because when it finally came and there was finally a bullish day or a bullish setup in here, I went in and I went in large. Now, the good thing about that was that I caught this entire trend, and I wrote it up literally probably from the end of 09 all the way up in here. When it started to break, thankfully I did not stay, I got out of that. And I use a trailing stop sort of mechanism in order for me to get out of trades. But that's really not the long trade I want to talk about. But what I learned through that, again, and I'm sure I will learn it again, and again, is that it absolutely, I don't care, it makes absolutely no difference what your thought process is about what you think is going to happen. And you hear this every day. This is what I know they try to, these guys just drill into your head because it's so important. But this, to me, was, real dollars that just evaporated in thin air. And I saw the technology. I flew to Denver. I met the people. It was wonderful. Never again, ever, will I fall into that trap. So that's the worst trade. Flip to gold, GLD. Actually, no, let's go to silver, because I play both of them. The silver's a better setup. Okay, this is daily or is this weekly? Can you go to daily? Okay, so, and then fast forward to current. And then zoom in a little bit, would you? And then go up. So everybody wants to short silver and gold, right? Can you go forward? Current? Yeah, okay. So everybody wants to short silver and gold, right? Because the macro arguments say that, again, silver and gold should go to the moon and up forever because the dollar's going to be trash and so forth. And then as traders, we hate those people, so we just want them to lose money, and so we can't wait to short their stocks and just let them burn. But there has to be a time frame, right? Because if you start thinking that here, that's one of the reasons, obviously, why silver went there, is because of all those guys who hated those, gold bugs and silver bugs, and then just ended up losing a lot of money. Whenever I see this, okay, and you're all familiar with the second mouse theory, right? Second mouse gets the cheese. Is that any commonality in here? For me, I live by that, okay? Whenever I see a great looking trade, like for example, one of these evening stars or whatever you want to call it, one of these breakouts that fails, for example, right here in August, where silver, and I had guys, oh geez, I got emails, oh, this is turtle trader's dream, time to get back into silver. I mean, I just want to vomit, okay? I just want to knock them out. So, but I knew that the first mouse was not going to get the cheese. And so I waited very, very patiently, because in my opinion, and again, I approach things, I am not, I love coming here. This is my first time I've been here, but I love talking to Bella because secretly I'd like to be one of you. I'd like to sit there and not have it, just, it's like playing video games to me. I love it. I think it's great, but I'm just not in that. I'm in Central Kentucky. This is a different world for me. But I definitely approach the market more from a psychological aspect than probably most. And I do that because I like the normal psychology of somebody saying, oh, it's a breakout, I want to buy it, okay? That's basic psychology, right? I want to buy this breakout, this makes a lot of sense, okay. But the psychology I like are the guys that are on the other side trying to fade that psychology, okay? So, most traders, well, maybe not in this room, but most traders, they see a breakout. If you secretly hate the gold bugs, I don't know a trader who doesn't secretly hate the gold bugs, okay? I mean, who's a gold bug in here? Anybody? Admittedly? You don't want to admit it. Okay, that's fine. But you see these guys, and I have some friends, and it's like, you know, well, you need to be in gold because the dollar's going to get trashed, and this is going to go up forever, and inflation, and blah, 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 and you know, this, that. You just hate them. You're just like, no, I'm going to short your stuff, and you're going to go down in flames. But it's never the first one. It's never right here. Because those are the guys, these two red bars, these are your angry revenge traders that got killed back here. They learned their lesson, maybe they lost in here and so forth, but this is too obvious. It is absolutely way too obvious for them. And so, or too obvious for me. And so what I did very, very patiently is I waited for this to be squeezed, and this, in my opinion, was just lucky. I mean, you know, what I expected was maybe a nice little run up, even a marginal new high, right? To really squeeze the guys. Because what do? They short up here and they stop at day high, right? Shorting here, stop at day high. Did they stay in? Probably not, because they certainly thought they were going to limit up and they're going to be, or you know, in the market, whatever, if you're playing futures. I typically play silver futures. But the bottom line is that when this did not stick, this second one, to me, that was second mouse stuff. And I went in fairly aggressively. Now, my stop, however, on this was above this. Again, it's different in the SF, but or the silver futures. But the my stop was above the previous failed break attempt. So me personally, that allows me to get away from the screen. Now I quantify my risk. You know, same thing as probably all of you do. I quantify my risk ahead of time. Exactly know, you know, how many shares or how many contracts I need to take, etc. But I can take that with the utmost confidence that I have now a much, much better edge. Because not only do we have one failed break, but we have all the aggressive traders who are now losing and more than likely getting stopped out and getting an opportunity on the second mouse that gets the cheese. Now, here's my problem. Premature covering all the time, constantly. So what did I do? I'm out right here. Yeah. I mean, another thing I always tell Mike, if I was here, you'd be yelling at me constantly. Because I am literally the guy who will have the great trade and just, you know, thank you very much and walk away and then throw keyboards out the door when I see this the next day. Because there's no reason. I mean, ridiculous. I could have taken half, I could have taken a third. I mean, just absolutely no reason at all. So that's me, okay? Now, where am I at right now? I'm getting ready to travel for a week. I am typically a daily pattern trader, okay? So I'll look at daily charts. That's what I sort of get into. But as I get ready, I've done this a few times in my life. I have 3 children. Each of the times that I have had a child and I've had to spend a couple of weeks or so away from the computer or, you know, at home or so forth, you have to make a choice. You either don't trade, which is probably what many people do here because they're day traders, but or you lengthen your time frame. In each instance, I've chosen to lengthen my time frame. It's been a pretty good deal. Flip to the Qs if you would. And if you wouldn't mind, go to a weekly. And back it out quite a ways. I have a rule that has saved my business on multiple occasions. And that is, no matter what I think about the market, from a money management perspective, and I'm talking of all the millions that I manage, my bias, and I know that I shouldn't have a daily bias or whatever, but my bias always centers around the 50-week moving average. For my business and my outlook on the market. So when a client calls me and says, hey, you know, I'm thinking about moving my money or, you know, or my 401k or whatever, I mean, because again, I deal with retail, general folks that have, you know, $250,000, $300,000 and they put with me and that's what they do. If you can throw a 50-week MA on here, I don't know if you can. And then if you can back it out quite a bit. The reason I do that is I don't want to think about it. Again, doesn't mean that when it's above or below and I cannot trade it in there. I cannot trade contrary to the larger trend. But for me, with the general market in relation to the 50-week moving average.
50-day?
No.
50-week.
50-week moving average, that is my general direction. Okay? Now,
you can't do it on that.
that's okay. Not a problem. You can pull it up. The Qs are right there. The Qs are right at their 50-week moving average. Okay? However, my litmus test is the S&P 500. There has been only a few instances in history. One is late 2007, one is back in the bottom of 2009, when you have a major confirmation break above or below the 50 period on the weekly. Now, again, for me, that's general trend stuff. All right, helps me to say, okay, if I'm, going long here for longer term stuff, etc., whatever. Helps me to stay on the right side. As I prepare to move to head out of the country for a week, we started to build a position on the 50-week against the 50-week moving average in the Qs. Okay, now I'm looking at this 7-month top in the Qs. I'm looking at a wedge break that is not yet confirmed to the downside, but is fairly, in my opinion, fairly weak. If we were to show this against the S&P 500, we would show that the general S&P 500 has been wedging now for 7 weeks underneath what is starting to become a flattening out or eventually a declining 50-week moving average, 50-period moving average, okay? And so in my opinion, the risk-reward, if I'm getting ready to be away from the market, if I'm getting ready to be out of the daily ticks per se, is my view is to lengthen my time frame, lengthen my leash, look for a short position, and step away. And that's what I've done right now, right or wrong. Now, if you go to the daily, I have a clear, which I'm very happy about, because previous to this I didn't have, I now have a clear pivot from which to trade against. Because if you look at the reversal bar of a couple of days ago, I'm not saying even the high, the reversal bar here from a couple of days ago, if you guys remember that, we had all of the high flyers, the Amazons, the Apples, we had all of those stocks that were trying to break out. They had already done so a couple of weeks ago, but or last week, but they were trying to really go against those. Many of them were bridging the gap, etc. And then we had that key reversal when it came out that 7 of the whatever EU countries weren't going to pop, blah 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 blah, whatever that garbage was. But the bottom line is we had a key reversal on that thing, and then we had another one and so forth. I now have a clear pivot from which to trade against that I'm using on the daily as a stop, but I'm using it as in essence my weekly position. I'm looking at this as a weekly trade, but in the daily chart, I now have a clear stop that I can trade against. So I feel very confident, right or wrong. I could be completely wrong, but I'll be going away, and we're going to go away with probably a 40% short position in the Qs. We'll actually use the QID now in this environment. It's beside the point, but we'll use the QID, and I'll use it against this stop right here. Now I won't go into all the individual charts, but I think that there's some excellent individual shorts that are setting up in some of the the Amazons of the world, the Apples of the world, etc. Some of the obviously the names that make up the Qs. But that's my trade right now. That is the only position I have on at this very moment. And again, right or wrong, that's what I'm playing it off of. Any questions? Any thoughts? Any comments?
Anyone have any questions?
Stuff, but.
Any influential reads that you'd recommend?
Reads in the market or book reads?
This is interesting. You teed him up. Did you pay him?
I wasn't even going to mention it.
Why don't you talk about your book?
I wasn't even going to mention that. I wrote a book published by Prentice-Hall called Trade to Trader. It's basically a psychology book, talking a little bit about what we just sort of we're talking about. I firmly believe that the day of technical analysis 101 is so long gone. It's just probably 90% of my trades are fades against basic technical analysis. So that's a great read. But my favorite above all is Mark Douglas, Trading in the Zone. By far, that book is, and I've had an opportunity to speak with him on several occasions. He is just a phenomenal. Much like your Stein, what's his name? Steenberger. Much like him. But
don't we have the same publisher now?
I don't know. Did you jump? Did you make a jump? I don't know. I'm going self-publishing. Never again will I use a publishing firm.
Didn't you send me to FT Press?
Yeah.
Yeah, that's why I don't write with Wiley anymore.
Okay. Yeah, they're good people. But yeah, that's by far my favorite book. I mean, pattern books and so forth, I just can't do. I mean, somebody's individual edge, or that's fine, but the psychology to me. I'll tell you what I'm wrestling with right now, okay? What we just talked about with the silver and the gold. Oh, well, okay. What we just talked about with the silver and gold. Here's what I struggle with. Just like you, I feed my family doing this, okay? I deal with a unique clientele. So I deal with a clientele that we have a rule in our business, okay? We're on camera here?
Yeah, we can edit it down.
No, it's fine.
I would clean it up. I
Okay.
wouldn't say what you're going to say.
No, it's fine. It's an internal rule, okay? It's an internal rule that we can lose money. It's okay to lose money when the market goes down, okay? In our business, it's okay to lose money when the market goes down. We can't lose money when the market goes up. Psychologically, I've been managing money on my own for a decade. Psychologically, our clientele cannot understand nor can they handle losing money when the market goes up. So, because I'm at that borderline where I'm still in the growth, building of my business, I don't have $1 billion under management. We'll get there. I'm very confident of that. But we're not there yet. I got 3 kids that are going to private school probably. I got a wife. I got a mortgage. I got, still the stresses of the day of trading. And so, what I struggle with is laying out the line to the read that I feel and being able to accept that real loss against my business. Does that make sense? So with the silver trade, to me that was the best setup I've seen all year in a broad market. That silver trade, I was salivating over that. Okay, any idea of my percentage of capital that I put out? Any clue? What would you think I'd risk on that as a mutual fund man? I mean, you're shorting silver. That's a big liquid market, big trade. What do you think I'd risk?
2%.
How much?
2%.
The capital risk, I risked 1%. That's terrible. And then you saw where I took it off, like 2x. I mean, it's terrible, right? So I have to. The struggle that I have right now is to be able to lose it and then stand behind it when someone questions me on it. Because that NAV that I have is published every single day for every client I have to see. Every single day. So, I mean, just the other day when I started to lay out that Q short, we were off 10 bips when the market was up like 2% in the emails. From newer clients, not ones that have been with me for a long time, but all right, what are we doing? We're down, the market's up 2%. Now yesterday when we were up 20 bips and the market was down, that's, no emails, right? But that's what I deal with. That's the psychology that I deal with. And so what I'm desperately trying to do is to get over that. Is to just say, you know what, forget it. Because I see this read right now in the Qs. And I mean, I see a big move coming. I could be wrong, stopped out, maybe we'll try it again, but I see a big move coming. I gotta have the confidence to lay that out there. I mean, I just have to. And I'm not yet there. I really am not.
Type up the spies. So when we look at the charts, we see that we bounced off of 112 a bunch of times. So if we hold below 112, we see that as a really good opportunity to be really short. Until then, we might get weak. We might have broken that sort of channel that was sort of uptrending from 112. But until we get below that 112, that's where we're going to be really aggressive.
Yeah.
And so we'll play both sides. So top 122, bottom 112. We're going to, if we see intraday strength and we're not below 112, we don't have any problem playing it from the long side. If we get below 112, we think we're going to go find a new level pretty fast. But we haven't done it yet.
And when I was on the plane coming up here, I go through about 2,600 charts a day.
Can you say that again out loud?
I go through about 2,600 charts a day. Every chart above $2 and 200,000 shares traded, I go through just to find.
And how you do that every day?
I do that every day, every morning. Yep. I do that every morning to find my trades. And coming up here on the flight, I was looking at that from the weekly charts. I typically only look at the dailies and try to find opportunities. And I do still. There's some dailies that are interesting to me that I'm would probably be playing if I was not leaving the country tomorrow. But I looked at it from the weekly perspective and I saw no bounces absolutely, and we could and understand that if this wedge, the things I talk about in the book, that 2009 was not a year of this incredible market, bull market. I mean, it's quantified obviously as a bull market, but it was idiots shorting and shorting and shorting again, and constantly being squeezed and squeezed and squeezed, and you see it over and again in the charts. where I call them bearish wedges turned bullish breaks. So, you know, if this is a bearish wedge that turns bullish break, because you can feel it out there. You see it on the blogs. What the heck was that video? It's the guy at BBC, and you know, the world's coming down, Goldman Sachs rules the world, and I mean, he's probably been losing money for 3 years waiting for this trade. That's so ridiculous.
I already made fun of him in here.
It's absurd. I mean, it's ridiculous.
It was like
I've been dreaming about this recession, and anyway, so
he was an independent FX trader.
yeah.
He's
So
a whole
but the
FX
emotion, you can feel the emotion. That, you know, oh, when it comes, I'm going to kill it, you know, get in the Fazmobile and the this and the that. So, you know, the potential is there for another, you know, big squeeze to the upside. So we have to be aware of that. But again, the backdrop I'm playing, the rule that I'm playing, that I'm observing is that 50 period. Now, you know, we could go right back up, touch it again, we could break above it, roll back over, whatever, but I'm looking at it from my perspective.
Your personal, you're trading a lot of reversal patterns.
Currently, yes, absolutely.
And that makes more sense to you. You like the reversal pattern.
I do. Take a look at SLW. This is one that just drives me nuts that I couldn't play. SLW is a, so can you go to a weekly? Back it out. Okay, so SLW has this, you know, sort of head and shoulders here, if you can see, right? This is the weekly pattern of SLW. But really, it's got sort of this barn top, okay? And what I really like about this trade for a lot lower, you could get a wedge in here, but a lot lower, is you have a reversal of a failed breakout. So I found this on the plane when I was, you know, again, looking at these weeklies, and I was like, oh, I love this SLW, you know, and I have to be careful because I get a little too emotional and think it's going to zero tomorrow, but you have this sort of top, and again, I'm drawn to the golds and silvers like a lot of traders because I can't stand the gold bugs. They drive me absolutely insane. And they got all heightened and excited here, you know, when all of these metals started breaking out. Whenever I see, and this isn't a complete diamond, but you're all familiar with the diamond pattern, right? Diamond breakouts, in my opinion, are some of the most powerful patterns out there. All right, so if you can draw a diamond, it's fractal, so it doesn't matter if you're playing 1 minute, 5 minute, 10 minute, it makes absolutely no difference. And every time you see a diamond pattern, just pattern that's in my bag is a diamond break. Okay, it's one of the most powerful patterns. In fact, the SPY had a diamond break in mid 2009. If you go back and look at the daily charts, you can draw a diamond. You can see the SPY broke right out of that diamond pattern, and it's because it's a head and shoulder top, but it's much more emotional. Bottom. It actually has a point where it has a sort of a almost like a capitulation in the chart. So you have the head and shoulders psychology top that fails. From failed moves come fast moves, right? But you also have this sort of capitulatory bottom. So it's just wrought with emotion. And the best patterns are where you've got traders that are so emotional and then they finally break out. But the best pattern above that I've ever seen is a diamond break failure. In fact, Yahoo. Go to Yahoo. Yahoo had one recently, and I played it. Once again, didn't play it well enough. If you go to a weekly there, I think it's best to show on a weekly.
Weekly.
Oh, that is a weekly? Okay. Can you back it out? Okay, so it's not exact, but you're going to draw a trend line here, draw a trend line here, draw a trend line here, and a trend line here. That's a diamond. Okay? Can you see my little nano white hands? You don't have a trend line indicator here? What's going on? Okay. So it should be touching here, but whatever. We'll just wing it. Crayons, it's not a problem. Okay, you get the gist. You had the Yahoo breakout. Okay? Now I played that breakout. I actually bought that diamond breakout thinking, okay, you know, Yahoo's going to be saved and the Yahoo's off to the races, whatever. It was a great breakout. The minute that sucker failed, I went very short Yahoo. Came right back into the pattern, diamond break failure. And of course I covered around 15, like an idiot. But these patterns, when diamond breaks fail, are very, very powerful.
What about Netflix? Do you trade Netflix?
I've not traded Netflix.
Type up Netflix. So we had this on our desk, and type up type up the 1 month. Type up the 2 week. 5 minutes. All right, so some of the trades, a couple of guys, we were talking about this today, they were buying Netflix, playing for the long, playing for the bounce, around the 130 area, stops below 129. As someone who, I don't like this trade, but as someone who's looking for reversals, what do you see or not see with that pattern?
First thing that pops out to me is an R4 failure. So if you draw a trend line from here, you're familiar with R4s, R3s, R4s. So a lot of psychology has been done on trend lines, okay? And the number of touches a trend line can have, and typically the strongest breaks or reversals come from the fourth touch. I don't know who figured that out, but Jeff Cooper writes about it a lot.
What books do you recommend for trend lines?
I have no idea. I've never read one. I just go through a lot of charts and then come up with cool acronyms. Get a blog in a minute. All right, so you got 4 touches here, okay? So that's the first thing that pops out to me. I stay away from Fibonacci, right? Because I picked up a Japanese candlestick book once, and I was like screwed up for weeks. Literally, I'm like, oh my gosh, that's a doji falling angel with a backsplash. And it was horrific. It was terrible, okay? So you have to be very careful what comes into your brain, right? So, but when I started recognizing the number of touches, and we just call them, I don't even know what the R stand for.
Resistance.
There you go, resistance, regression, whatever. So I started seeing an incredible pattern of R3s being, you don't have a trend line unless you have 2 points, okay? So 1 and 2 are nothing. But R3s, a lot of reversals, quite a bit. Powerful moves at R4, okay? Whether it's a breakout or a failure, okay? And the first thing I would notice here is that you have, R1, R2, R3, and you might, you say, oh, well, isn't that a 3 and 4? Nah, you gotta have equivalent amount of time between the first 2 touches. So there's an R3, and then you can see you tried to make an R4 and it did not break out. And in my opinion, if I was looking at this time frame, if I was just playing a shorter term, that to me is the short area right here against this as a stop. And then bam, I mean, look at that. That was great.
How do you do it?
How do I do it?
How do you do it?
How do you short it?
I don't know. That's a good trade. I mean, on our desk, that's what we say, good trade.
Okay.
So that was a good example, good setup. We had a good follow through to the downside. Anyone have any questions for Quint?
What's interesting here too is you have an R4 in the bottom. So you have a 1, 2, 3, and 4 here. So you have both, you have the wedge break there as well. CSTR, Coinstar, has currently another, this is the one I'm looking at, weekly, go to the weekly, back it out if you would. This is also a diamond that is failing right now. So, and I have a suspicion, and I'm working with an options trader to work a trade around earnings. I have a suspicion that the move will come obviously after earnings. But this is a diamond top and bottom obviously, and you can see tried to break out to the upside, diamond break to the upside, and even took out. So if you think about it, if you're a trade to trader type, you have a head and shoulders top here, right? So if guys have got in here thinking, oh, head and shoulders, neckline break, this thing's going to 0, well, their stop is typically over the right shoulder. So here's a head and shoulders that actually failed, right? But it failed again to the downside, so the diamond. In my opinion, I'm looking, again, we're working with an options trader to try to, because we mitigate risk, the stock gets bought out for 300, but all of a sudden, I believe that you're going to see Coinstar a major move to the downside. Interestingly, back this chart out even further, I believe there's about a 10-year base in this chart.
Delete the lines.
Coinstar had a monster multi-year breakout. So if this fails, if this diamond pattern in fact fails, it could be, and this would be for me in a longer term trade, the potential to get a good entry on a major short move in this stock. So this is a huge breakout. And if this exact fails and comes back into this pattern here, now you have a major multi-year failure. So I know it's way longer term than you want to have anybody take home, but that's what I look at. That's what I'm looking at.
One more time.
Sure.
How many charts do you look at a day?
I have a question about that.
2,600. Yeah.
Do you like just go through like chart like stocks that you know, or do you go by industry, or do you just go down by a list?
Okay, so I use TCNet. That's my charting software by Warden Brothers. One of the reasons I use them, and I use their older version, they've actually upgraded it, but I had them make sure that I can still use the older version because I can just hit spacebar. Boom, 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 boom.
That's how free stock charts works too.
That's fine, but the problem with free stock charts is you can't share lists among, so I do it at home on my couch, in my underwear drinking coffee. I share my list to my office, I have it there ready to go. So I've had guys, trade ideas for example, come to me and said, you have these setups, we can build you this algorithm to find these setups. Okay, I did it. My trading was terrible. And the reason I go through so many charts is I have to understand what the pulse of the market is. Right now I'm starting to buy the SRS. I know that's forbidden, right? The reason I'm starting to buy the SRS is the best looking shorts, in my opinion, that I saw over the last week are the commercial real estate stocks. They haven't looked like, I don't care anybody said SRS is going to go to 400. They've not looked like shorts until, in my opinion, right now. They're one of the only groups out there that I see that are shorts. I would not have found them had I not gone through all my charts. So every morning, I'll start at FinViz. I used to have to pay for this service until FinViz came out, which is great. I develop my list. I put in average volume over 200,000, price over 2. So I'll trade anything above $2 a share and 200,000. Now as we grow, it's getting harder and harder because I'll build a position and I'm going to get screwed. I can't get out of the thing. But 2 by 200 gives me about 2,600 charts. I load them in and I just go through them. And the good thing about TCNet is I can hit an F, which flags it, anytime I want to do some more research. And then I'll take those charts, I'll bring them over. The size of that list, for example, the last time I did this on the chart, on the plane ride up here, I did the weeklies. There were 44 names that interested me. In good, healthy environments, now they were primarily all bearish. In good, healthy environments for me, looking at the long side, and I'm a GARP momentum trader. Remember my roots, Rev Shark, right? He's a GARP guy. I may have 80 to 100 names that I just love, but I'm able to find new names. By culling that list every day, I'll find all the earnings winners. You guys read the news. I don't read the news. I want to see the volume. I want to see the breakouts. I want to see the names that I haven't ever seen pop up on the radar because some guy bought 1 million shares of it or whatever. So it's just, I've had so many people that have come to me, oh, you should save time this, save time that. It takes me an hour to do. Okay, it takes me an hour. It doesn't kill me.
That's a trained eye though, seeing what you do.
You do it very quickly, absolutely. When I first started, it took me 3 hours.
Okay.
But I am not smart in the intelligence world, okay? And we were talking about this last night at dinner with a few other traders. The greatest thing about the stock market is all these brainiacs, all these intelligent guys, like many of you in here, you're all brought down to my level because the market humbles you in a nanosecond. And I love that because hard work levels the playing field. I'll put in the work. No disrespect, but I'll outwork most people in this room. No question about it. My day will start at 4:30. I will work till 9 at night. I have 3 children, and I give them enough time. But that's how I built a business. That's how I'm going to build a business. And I know for a fact that I'm trading against you sitting in here with much better equipment, much better short-term, et cetera, et cetera. So I have to find an edge, and the only edge I have is through my hard work, period.
All right, let's feed everyone.
That's great.
Thanks a lot for coming.
Yeah, thanks for having me, guys.
I think we should have pizza outside.